All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy, and glad to be here. Another busy day on the market. So why don't we, before we waste any time, get to these prices, because that's really what you want to see. And here, you don't care about what I have to say. How about corn? Bring up the corn chart, please. See what that looks like today. Well, September's off and running, really kind of pulling away from the D's there. That spread's widening. 12 and a quarter cents higher in the SEP to 627 and 3/4. D's is only up 9.5 cents. We'll take it, though, right? That's the new crop. 623.5. That's a penny off the highs. How about soybeans? Let's take a look and see what that's doing. Well, that's doing much the same. SEP's really outpacing the NOVE. 39 and a quarter cents higher in the front. 1551.5 is last. That's about 3.5, 4 cents off the highs. The new crop, Novi, 1451.5. That's up 22 and 3/4 cents. With that $14 level significantly in the rear view. Now we've got 15 looking out the windscreen there. So let's take a look at Chicago wheat. What's the wheat in Chicago doing? Well, that one's up as well. It's a lot of green on the screen. These are easier days to do when you've got SEP wheat in Chicago up 21 cents to 802.5, about a penny and a bit off the highs. And let's go to March. That's the middle of the deferreds, or I say the middle of the curve. 19 and a quarter cents higher in the March to 835 and 3/4, and that is about a penny and a half off the highs there. How about the hard red wheat in Kansas City, the HRW? Let's bring it up here and see what's going on. September's up 22 and 3/4 cents to 874.5, 2 cents off the highs. March is up 21 and a quarter cents to 885, a penny and a half off the highs there. How about Minneapolis, the spring wheat up there? That's where our next guest analyst hails from. September's up 20 and a quarter cents to 913 even, 2 cents off the highs in SEP. As the SEP contracts pretty much across the board here are gaining on their deferreds. March is up 18 and 3/4 cents to 937, even at 2 cents off the highs there. And then let's take a quick peek at cotton. Cotton looked like it was going to trade higher, and it did. 293 points higher to 102 even. There we go. That's close to the high, about 46 points off the high. But that's finally getting that D's contract. Well, we rallied from that 95 level all the way up. So it's a good move as of late in cotton. All right, let's get to Tony Headrick. He's with CHS. Thanks for joining the show here this morning. Tony's in Inver Grove Heights, Minnesota. What do you got for us, Tone?
Hi, Scott. Thanks for having me, as always. Pretty active day across commodities, as you alluded to here. Energy is in the same bucket, as it were. It really all started out with the CPI print here this morning, coming in a little bit less aggressive in terms of inflationary pressures than anticipated. So a couple chain reaction events happening here with the dollar really down quite a bit. Equities really getting a pretty decent bump here to the upside today, and that provides a little bit of strength to commodities as a whole, certainly on energy here as well. We're looking at the RBOB gasoline contract up 7 cents today, ULSD, the diesel contract up a couple cents, and crude oil well off of its lows, currently at 90.33, down 17 cents. Above its earlier low of 87.66. We did see the EIA weekly stats today, sort of a mixed bag here in some ways. We did see a pretty decent build in U.S. crude inventories, 5.5 million barrels. That sort of matches the drawdowns that we saw out of the SPR, which were right around that level there as well. And then diesel inventory is up 2.2 million barrels roughly. And gasoline really getting a lot of attention, which should be as it relates to demand. We did see 4.978 million barrel draw. Let's call it a 5 million draw on gasoline stocks, even as refineries increase production. Really a lot of emphasis on gasoline demand over the last several weeks as it relates to what the Fed is doing, et cetera. But we did see a pretty decent bump back higher in gasoline demand, 9.123 million barrels per day for gasoline supplied, i.e. demand here in the U.S. That's a 7% increase week on week for a 582,000 barrel per day bump. And so we've got RBOB, as noted, up about 7, leading the way today.
All right, that's great stuff. I mean, the energy's at the core of what we were worried about today. We saw that in the CPA print, energy coming off here a little bit. Even though we've got demand up, I guess that's going to be some good news, though. So I really appreciate you coming on. Tony Headrick, CHS, Inver Grove Heights, Minnesota. We're going to bring it back to Nashville. We're going to take a quick break and come back after we pay some bills and talk more about livestock with me after these messages.